Hi, I'm Bob Keiser, Vice President with Global Markets Intelligence at S&P Capital IQ. Thanks for previewing this week's edition of the Lookout Report. Greek sovereign credit default swap spreads spiked to new highs in excess of 7,000 basis points on both the trading day before and after the Greek referendum during the first weekend in July, illustrating a doubling of perceived Greek sovereign credit risk. Broad pan-Europe sovereign credit contagion risks, meanwhile, and for the moment, remain largely contained, contributing to the relative stability witnessed in developed market equity markets. We also believe that fully valued but still rational U.S. equity market valuations are helping buttress the U.S. stock market despite clearly elevated geopolitical and global macroeconomic uncertainty. Near-term ambiguities can be tied to various issues such as the ongoing Greek bailout discussions, the Iran nuclear negotiations, the outlook for the Chinese economy, and the severe volatility recently seen in Asian equity markets, and even still the uncertain outlook for U.S. monetary policy. However, despite heightened uncertainty, for many investors there still appears to be no alternative to high-quality U.S. stocks as long as European sovereign credit contagion risks remain suppressed and the U.S. economy continues to expand at the 2.25% GDP growth rate characteristic of the recovery cycle since it started in mid-year 2009. In terms of stock market valuation, the S&P 500 index has now pulled back to a more attractive 16.5 forward price-earnings multiple as of July 8th, providing investors with some degree of a cushion relative to the richer valuations seen earlier this year. As we head into second quarter corporate earnings reporting season, we will closely be following both company results and future earnings expectations for evidence that existing market valuations are in line with economic fundamentals within the context of existing macroeconomic and geopolitical risk. As far as the fundamental U.S. macro outlook is concerned, GMI Research is encouraged by the resumption of U.S. non-farm payroll growth in excess of 200,000 new jobs occurring in May and June. This follows the slowdown in job creation recorded the previous 2 months in March and April on the heels of the prior 12 consecutive months of minimum 200,000 monthly payroll gains seen between March 2014 and February 2015. For further thoughts on these topics, plus additional cross-asset class insights from McGraw-Hill financial thought leaders, see this week's Lookout Report titled, "A Tranquil U.S. Equity Market Reaction to Greece Partially Reflects Rational Market Valuations." Until next time, I'm Bob Keiser with S&P Capital IQ.